Hello and welcome to this very important interview that I'm going to be having. And I want to welcome all of you to the Gold Coast City Kempinski Hotel for this interview. Now, let me tell you that this interview is happening at the sidelines of the 2025 IMF and World Bank spring meetings, which is happening here in Washington, D.C. And my name is Norman Akwaheford. This week, what is important that you need to know is that the global economic leaders, policymakers, and innovators are gathered to confront some of the toughest questions confronting some of these nations or shaping the future of finance, resilience, and growth, especially the ones that are happening in emerging markets like ours. And it's the reason why we are all gathered in this room today. Joining me now for this interview is a man who needs little or no introduction, Bright Simmons, the founder of Pedigree, a policy analyst, and one of Africa's most influential voices on innovation, accountability, and economic transformation. Ladies and gentlemen, Bright is also a featured speaker at today's conference, and that's why he's sitting with me. He will be tackling critical issues of domestic capital mobilization in a rapidly evolving investment landscape. And that's what we'll be talking about. My name is Norman Akwaheford. Remember, we're coming to you from the World Bank IMF office where the spring meetings is taking place. Let me now turn to the reason why we're here, the man that you've all been waiting to listen to. Thank you very much, Bright.
Absolute pleasure.
I'm sure that you are aware of what is happening around here. The Financial Stability Report was released today, and it talks of a lot of high risk, for emerging markets like ours. And I think that in Ghana, this topic for this conference has not come or has come at a better time. Let me put it that way.
Yes, it's a very timely conversation. Already, the cost of capital for emerging and developing markets like Ghana is rising because of spreads. The spreads are widening on the bond markets already. So we see an impact with the US retreat, with some of the policy uncertainty in the United States, and then the trade war already starting to build momentum on the adverse side for Ghana on the cost of raising capital. So the global environment is not very benign. It's pretty hostile at this stage. But there are also opportunities. And I guess part of the conversations around us here in Washington, D.C., here on the sidelines of the World Bank IMF annual meetings, the spring meetings, is how do countries like Ghana reposition strategically?
It brings me to, when I look at the theme, I'm looking at the rapidly evolving investment landscape where global capital is becoming more risk averse. What should be Ghana's strategic pivot to unlock long-term local investment potential?
The truth is, and this is going to annoy a few people in the room, but the truth is our local investors have not shown in any way that they are less risk averse. So when we have global headwinds and international investors are retreating and the likes of it, typically domestic investors in the formal sector, in the formal markets, have also tended to follow suit. How we decouple some of that contagion, from our domestic markets is a matter of great interest to all of us. But the truth of the matter is that typically when things are pretty bad on the international market, through the channels in which they infest our markets, whether it's inflation and or other destabilizing forces, it's tended to be the case that our investors have also grown risk averse. But the famous saying, the time to invest is when there's blood on the streets.
In the streets, yeah.
So there's the case to be made that increasingly there's opportunity for local investors to look at our domestic setting, to look at our domestic story, and to turn around their investment thesis to align with our domestic story. And our domestic story right now is a recovery, tepid as it is, weak as it is, the recovery from the damaging effects of the 2022 defaults. So in Ghana, the story is generally moving towards a more positive area, So my sense would be that our domestic investors, despite the fact that the global picture has soared, will still be looking at the fact that we have a weak recovery underway. And maybe in that sense, there is a reason for them to start to look at the domestic market more favorably than they've traditionally done in the past when things are bad globally.
Do you see a structural gap here? If you're looking at the fact that, I mean, somebody will ask you, how would you assess Ghana's, current ability to mobilize domestic capital, as a sustainable alternative to the external borrowing that we have seen over the period?
Obviously, we have to distinguish between the sovereign borrowing, the government of Ghana borrowing requirement,
Yes.
the financial needs that the government has to meet its budget requirements from private sector.
Yeah.
This conference is primarily focused on the private sector, but they're interlinked in some way.
Yes, sure.
We also have to recall that we are discussing primarily the private equity and the venture capital space, which is in a way the elite layer within the overall domestic financing landscape. Is the elite layer. You have to be extremely sophisticated as a business to be able to attract private equity or venture capital into your business. Given those caveats, we then have to recall where we've come from. We started off with the initial venture capital fund as far back as 1992. Then in 2004 we formalized the venture capital trust fund because we got a law in place, and then very recently, maybe 2-3 years ago thereabouts, this fund was recapitalized. Remember that in the beginning, the venture capital trust fund in Ghana was actually seeded with tax money. It was tax money that the government used to seed that fund. On top of all of this is the fact that we've seen over 1,000% growth in asset under management across the different fund management companies. Mm-hmm. And this is not talking about the Ghana government seeded VCTF alone, but
okay.
All of the different fund management companies, about 72 or so of them, or 73 if my memory is right. And AUM, or assets under management, has increased by over 1,000% since 2008. So we're talking about significant growth, but a few issues. The first is that most of that growth I call spillover. What do I mean by that? Most of that asset under management growth has come about because if you take regional funds like Africa funds or West Africa focus funds, Ghana fits the portfolio strategy for many of them. So in that sense, there's been an allocation to Ghana. Right now, we have about 90%.
Okay.
No, actually more than that, maybe 99%, 97% thereabout of all the fund management companies, the capital that's going to these fund management companies, coming from these strategic decisions from regional focused and West Africa focused, Africa focused and West Africa focused funding vehicles. The local funds, the piece of the landscape that is dominated by local funding alone is just roughly 2.5%.
Wow. And
if you think of CD denominated funds, that's just about 1.5%. So what we are saying is essentially is that you have a landscape dominated by decisions taken at regional level, where Ghana fits a portfolio thesis. So I'm setting up a regional fund based on certain parameters. Ghana is a fit. Because of that, I put some money in Ghana. I'm not saying that is a bad thing or anything. I'm just trying to explain that is a dynamic that has shaped our current funding landscape. And then when it comes to Ghana-specific domestic focus funds, particularly those that are CD denominated, we're talking of just about 1.5% of all the fund management company, the capital that's at stake or that has been deployed across all the fund management companies in the country. What does that mean? What that means in essence is that we are at a point where in order to dramatically increase the spread of that capital beyond a few narrow set of sectors, we need to have more domestic actors come into play. Wow. Let me explain. Maybe 90% or more of all investment that are coming through these vehicles, these fund management companies, in the formal VC, venture capital, and private equity category, in that formal category, maybe 90% or more of the funds that are coming through that channel focus on technology-enabled services, often narrowly defined. But we know in our country, the opportunity is very, 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 very variegated, by which I mean that there are a lot of areas that are largely untouched in agro-processing, in logistics, going beyond that into tool fabrication, things like that. It's very difficult to get money into these areas when they don't fit a regional or a global portfolio thesis by a major fund, right? Because they have a regional focus, and they might decide that for Ghana, we think the only thing that's interesting to us is technology-enabled health services.
But if
Right.
if I was going to bring you in, just because you talk about technology, you talk
Yeah.
about Ghana's whatever, but you know about the pensions fund,
Yeah.
and you know the law,
Mhm.
and I'm sure most of the people in the room here today
Mhm.
will tell you the pension fund managers.
Mhm.
I mean, they look at that area, and there's been a lot of talk about it.
Mhm.
Is Ghana getting it right, or are we still risk averse if you look at the institutional capital that is available?
So that's where I'm coming to.
Yes.
Because a lot of the current funding that has gone into venture capital and private equity, it's driven by broad portfolio decision making by regional funds and sub-regional funds,
Sure.
as opposed to Ghana-specific strategies. What has happened is that we've seen a narrowing of the investment focuses.
Yes.
So it's only a few sectors that are getting money. It's simply what I'm trying to say.
Yeah.
Now you are suggesting that if you had local pension funds get involved, that might change. And that is actually the thesis that the Ghana Venture Capital and Private Equity Association also has, together with the Impact Investment Ghana, in trying to bring pension funds in Ghana into the picture. And some of that some of those efforts have already borne fruit with the Injaru Fund that has been launched,
okay, sure.
where local pension funds are key anchor investors. But that percentage of the overall deployed capital is still very small. So essentially, the room for growth is dramatic. The question is, why have they been risk averse to date? Some of that has been regulatory in nature, some of that has been policy in nature.
Yep.
And in some ways, in my view, and I think this is a view that is shared very much by the impact investment community in Ghana, particularly Impact Investment Ghana, which is an association. Part of it is also educational in nature, by which I mean that the skill set of the current fund managers within the pensions space was not honed in private equity or venture capital, right? So you are now trying to move them into that area. There's a lot of learning curves. There are a lot of learning curves involved. There's a lot of capacity building that is required to make sure you have fund managers that understand that space. And how do you localize private equity and venture capital when a lot of the data, in terms of how you do this business and do it well, doesn't originate in Ghana itself? Because we have a very limited scope in respect of the legacy data about this space, right? So if I'm coming to this area and I'm looking at the data that suggests that risk is, I need to interpret risk in one way or the other. How am I getting the right amount of data to help me execute my strategy when a lot of that data is in very narrow areas in Ghana and it's not sufficiently, historic? What do we do about these areas? It requires a lot of thinking. In some instances, you can look at jurisdictions that are similar to Ghana and proxy. But all of this is difficult work.
Because that was going to bring me to a question I was going to ask
Exactly.
you. Can you point to an African or emerging market example?
Well, it's what
we could learn from.
It's what the Ghana Angels Investment Network calls the KINs. Kenya, Ivory Coast, Nigeria, Ghana, South Africa are the places where venture capital and private equity in Africa are doing well. So essentially, Ghana is shoulder to shoulder with the best in Africa in that respect. Of course, Egypt has suddenly become very, very prominent and is raising more money than some of the King's countries. But my point is that there isn't a lot of insights that we can glean from learning from Kenya or Nigeria, because even though they are doing better than us in volume terms, in terms of historical data, they are not that much deeper than Ghana. So what that means, therefore, is some conscious effort has to go into creating the right structures, creating the right capacity, creating the talent within the space in the pension supported funds that are going to emerge to get this done. Of course, we already have fund managers in Ghana that know this very well. We just mentioned Injaro. Yeah. There are a couple of others, Phoenix. There are a couple of others. So it's not to say that when it comes to the actual investment, we don't have the capacity. It's when you are talking about the funds of funds, those that are supporting and the wholesalers, so to speak, who are bringing money into the funds. That's where we have the challenge. So to me, it's a trust issue. We have the fund managers who can do the job, but the people that's supposed to give them the money, the pension funds and the others, they don't have sufficient awareness. Okay. And they don't have the models all primed up, ready to evaluate and know where to put their money. So how do you over time build trust is going to be important, but they themselves have to build capacity as well. And I think we need the resource to come. I'll give another example that you'll find shocking. Maybe 90% of all the money in the ports, in the different fund management ports that we have in the country, roughly, if my numbers are right, roughly 90% or so have come from development finance institutions. Development finance institutions are a very narrow source of capital. They have a certain mandate, they have a lot of check boxes, and they behave in a certain manner, right? So you want to diversify the source of funding. And pensions, local pensions is one of those.
One of those, yeah.
In order to do that, though, you need to take into account the peculiarities of the pensions industry, like we discussed. Some of them are policy related.
Because they are holding much of the money today in our country.
Maybe $5 billion or so.
Exactly, yeah.
And you are talking of the entire fund management industry in Ghana having less than $7 billion, if it's correct. Yeah. But the point is that most of that money has come from overseas, is my point I'm trying to make.
Okay.
So if you're going to have the local investors come in and start with the pension funds and the rest of it, it's not just the educational learning curve as I've described it. And it's not only the trust issues that are, so that you build this trust and you enhance the trust. It's also the fact that the existing complementary source of capital being narrow is a challenge. So if you have DFIs alone being the main complementary capital coming in, that is going to create some friction in between if you're co-investing. Sure. So we need to also attract family offices, other international source of capital, so that pension funds go into the business supported by other source of capital that makes them feel that they're not taking the risk alone. So these are all areas that I think national policy strategy can begin to look into.
That brings me to my very last two questions for you, because national strategy is very important. Now that you see that, there's rising citizen interest, in economic outcomes that we have in this country. Now, is it time to democratize? I mean, if it's the right word to use, ladies and gentlemen,
access to capital,
democratize capital mobilization. You understand? That's the right word. Through the platforms that allow Ghanaian citizens, our citizens, to directly fund national developmental projects with full transparency.
So you are talking about crowdfunding and all of those elements, and we have some regulatory catching up to do to enable crowdfunding and to take off. There is also areas such as the gold fund, where attempts are being made to create ETF, exchange traded funds, etc., so that people can benefit from our natural resources. All of those areas are definitely interesting. But I think where we are now, when it comes to this democratization, part of that work has been done by the GVCA and the Impact Investment Ghana in understanding how the existing funds operate and whether or not they have the right lenses for investment that are inclusive. So, for instance, they will tell you that when it comes to blue economy or green economy, we don't have investment funds in Ghana that specialize in this area. When it comes to gender-based investment, they will tell you that there's only maybe one or two funds in the country, like ICABA and others, that are sufficiently sophisticated enough to be able to invest with a gender lens. Now, all of these are important because getting women, capital into women-owned businesses, getting capital into youth-owned businesses, getting capital into businesses situated in rural areas, all of this require a lens. Some people would dispute that. They will say, no, let the waters rise and every boat eventually will rise. But we've learned the hard way that without the right lens, it doesn't take too much before major inequalities build up to the point where they are not remediable. It's not possible to remedy them. What does that mean? What that means, therefore, is that we need to have specialized investor communities that genuinely care about some of these issues, whether it's rural investment, whether it's women and things like that. And sometimes we need policy nudges, right? Using the tax system, using the public procurement system, using all of these systems to figure out how you do that for the portfolio companies to benefit. But if you set up a gender lens company and there isn't a national framework to ensure that what we call the affirmative action bill and things like that, it's not accelerating in the direction that empowers women's economic rights, right? Or rather empower women with the right capacity, then eventually any gender lens fund starts to underperform general funds. And then why will anybody then apply a lens, right? So the moving in sync with the policy dynamics of the country is going to be very important. And that means therefore that we need people on the government side that understand these issues, that are talking to, so from GIPC's angle, from the various
free zones board,
the sovereign wealth funds,
the sovereign wealth funds, and all
talking to the likes of GVCA, talking to the likes of Impact Investment Ghana to align around these things, so that when these lensed investment strategies are being pushed through, we have the sequential support elements coming from the government side and the policy side to complement. And so that's where we are now with this inclusive radical inclusion agenda. The radical inclusion agenda, as the Sierra Leoneans now call it, requires to sync the policy side with the business side. And I think the likes of GVC and the rest are going to be very powerful in providing that bridge.
Right. Just before we let you go, I mean, before this interview, we had asked members and the general public to sort of also send their questions, things that they would like Bright to address. And so there are two questions that we have sieved out of the many that we received, and I'm going to read them verbatim to Bright and have him answer those questions, and then we can bring this interview to an end and then allow the conference to continue. Bright. The first question was, it says that what is your vision for Ghana's domestic capital mobilization over the next 5 years? And what bold reforms or disruptions would you recommend right now to turn intent into momentum?
Very good. So, I mean, first of all, I wish I was in the room with the other conference attendees, because I can just imagine the coffee hangout conversations that's going to proceed. And I definitely thank GVCA for giving me this opportunity to still share my thoughts, notwithstanding the fact that I'm here in Washington, D.C. And it's a great question in terms of the visioning.
Yeah.
First of all, we need to understand that no country has succeeded with a capital ecosystem that is as fragmented as we have in Ghana, right? So where, the bulk of the investment that goes into private equity and VCs don't come from institutional funds that are domestically domiciled and are aware of the local issues, and therefore have strategies and theses that align with the broad generality of the market. And then you have a situation as we have in Ghana, where the stock market is not a place where you can exit portfolio companies, right? So even if you did invest in a portfolio company, whether as a VC or a play or a private equity play, how do you exit, right? All of these things tell you one thing, which is fragmentation across the landscape. How we carefully and systematically fuse, the different levels of the capital system, from the stock market as an exit channel, from institutional investors as wholesaler providers of capital, from at the level of the VCs and the PE people who are doing the micro interventions, discovering talent, discovering new business models, etc., and putting the capital behind it. How we sync all of that, how we integrate all of that, so that one channel flows into the other, one channel supports the other, one particular success story becomes the narrative that another layer of the capital ecosystem rise upon to raise more money. How we do that is a matter of strategy, and you can't do that without policy being involved. So my vision is one where there are people in policy who are entrepreneurially minded. People at GIPC, people at GEPC, people in the sovereign wealth funds like GIF and MEF, etc., who genuinely understand that only satisfying their strategy will lead to nothing.
Nothing. Okay, great.
They have to be sitting there at the table with GVCA, with Impact Investment Ghana, and saying, how do we align everything we are doing? We have 24-hour economy now, which is supposed to be focused primarily on the real sector and building capacity for value chain development and integration in Ghana. How is their mandate going to be aligned with the whole process of deepening the capital markets in Ghana? Because deepening the capital markets in Ghana is the issue. And the only vision that matters is how we deepen the capital markets in Ghana. But you cannot do that if there's this level of fragmentation and one level of the ecosystem does not talk to the other level of the ecosystem. We need to have a situation where if there's success in one level of the ecosystem, it automatically snowballs into the other part of the ecosystem. Sure. And then what will then happen is you have tighter integration, you have more effective outcomes, and because of that, more capital follows through. Because the way it works is that success begets success.
Sure.
Success begets success. And if we don't have that situation where if there's a great exit in a portfolio company in a VC fund, then all of a sudden all the beneficiaries along the chain feel the need to put more capital back through the channel, then we've lost a lot. We've lost a lot. We need success stories. Some of these portfolio companies have to become big national champions, and some of that can be deliberately executed. The government, the key stakeholders can deliberately target a number of major portfolio companies, turn them into national success stories and then regional success stories. That becomes the basis why people then invest in round 2, round C, round B, round C, etc. of the same funds, which then snowballs into whichever pension funds that back those particular funds become much more profitable, and because of that, other pension funds then follow, etc. So we need to see this game being played where the success story of one part of the ecosystem triggers the success story of other parts of the ecosystem. That is really the vision that I think all of us might have, not just myself.
Thank you very much, Bright
Thank you,
Simmons, for another insightful conversation and always forward-looking, grounded, one that would shape the conversations. And we are hoping that what you've heard from Bright today will help shape the conversations that is going to be happening here at this conference. We came to you live from the HQ2, which is the IMF building, at the sidelines of the 2025, the World Bank IMF spring meetings. My name is Norvan Akwa-Hayford. I'm the managing editor for Norvan Report. You can always visit our website and then, get your top business and financial news. Until we meet again, we hope that this conference, the conversation are the ones that will translate into, actions that will translate into making the economy better for all of us. Thank you very much.